Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have Nick Blitterswyk to update us on UGE International. UGE trades on the TSX Venture Exchange under the symbol UGE and on the OTC under UGEIF. The company is trading at $2.62 with roughly 28 million shares outstanding, or about a $74 million market cap. I'd now like to hand it over to Paul Andriola.
Great, thanks, Trevor. Yeah, great to have Nick back. Nick, we spoke, I think it was August or September of 2020, sort of right in the middle of the pandemic, and also nicely just before your stock started a pretty tremendous move over the last half a year or so. So obviously there must have been a lot of progress. We know there has been, and we're just grateful that you could get back to us and give all our listeners an update. So, so Nick, I'll hand it over to you. What have you been up to? Oh, as a matter of fact, why don't we do this? Why don't we give a brief summary of what UGE does, and then we can get into a bit more of an update.
Yeah, sounds good. Thanks so much, Paul. Thanks so much, Trevor, and good to be back. And yeah, as a quick summary, UGE, we're a solar developer focused on the commercial and mid-scale space. So, you know, this picture, I think you can see on your screen, is a large school. Actually, this is a couple hockey rinks, but in this commercial to mid-scale space, and within this, we develop those projects, build them, and then finance to own, operate them. You know, 2020 when we met, give or take, you know, halfway through last year, was about 6 months or so into our pivot to starting to own the assets ourselves and turn them into operating assets and long-term recurring revenue. And that's resonated really well with our clients, with the market, and with our margins, and has been a really positive shift for the company. So we've been happy with how that's been working out. And you know, I think it's partly been witnessed as well with the growth in our backlog last year, which you know, beginning of the year was about 30 million US. When we spoke, if I remember correctly, it was probably in like the 70 or 70 plus $million range. We ended the year with about 120 or so, just given our Q3 number plus deals we announced since then. And so those are projects that we're working through the process of developing, building, constructing, and then turning into operating assets. So you know, lots of work for us to do over the next couple of years as we build out those projects, and then as we, of course, are developing other projects along the way as well. So that's a quick overview of what UGE does in a nutshell. I think, you know, Paul, did you want me to go into updates since we spoke last, or?
Yeah, please. Yeah.
Okay. Yeah. So, you know, since that time, you know, I think number one on the client side of things, we've announced several additional projects. Our two most active markets in 2020 have been the broader New York City tri-state area, number one, and then the New England area, especially in Maine, which has been a very good solar market for us over the last 12 months or so. So we've added a number of projects into that backlog growth since then. I hope that I don't give anybody, you know, make anyone dizzy, but, you know, through our deck, which is available on our website, you know, just a couple other quick notes that I'll touch on here, if I can do this here. So, you know, number one, in terms of the overall industry, I think that in the last 6 months in particular, the overall like investor awareness of how far solar has come, and the opportunity here has just continued to increase. So I think the bolded line here, you know, that's from an International Energy Association report that talks about solar being 80% of all new energy by 2030. Within the industry, we for years used to laugh at the annual IEA report because whereas solar kept growing exponentially, their forecast kept going just, you know, straight out to the right, and maybe even down a little bit. So for them to catch on with how exponential this industry is growing is great. And then the other area that I find myself talking about more and more, and it's a regulatory one, so bear with me here a little bit, but in the commercial space, and I probably actually mentioned this last time too, so I'll keep it short, but you know, commercial solar projects were typically the building using the energy, whether they were buying the system or buying energy from the system. And what community solar allows you to do is separate that. So you can install solar in one spot, consume it in a different spot. And so, you know, our growth in Maine last year, as an example, talks to, you know, that market just opened up and we were the first ones to build a community solar project in Maine last year. But then since 6 months ago, a number of other states have come out with various levels of programs. So New Jersey already had a pilot, but they doubled the size of it. I believe it's Virginia and Pennsylvania both had like legislation that says that they will produce a community solar system program, which isn't out there yet. Rhode Island came up with a pilot program, etc. So there's a lot of good activity, which really expands our addressable market. So that's something that we're excited about. I'll just touch on this, how we develop and bring those projects together. There is quite a bit of nuance to that. I'm just pointing at this slide, mostly saying, hey, this presentation's on our website, but this gives a specific example about how this comes together. This is for one of the projects that we secured in Maine last year, and this one we're expecting to start construction on in Q2 of this year. But in essence, you see that we fund the project fully with non-dilutive sources and not from our own equity. So we own the project through sweat equity and actually capture positive cash flow as we build it, and then as we operate the project over time as well. I'll go through these quickly, but of course, happy to talk more about them as we go. Another, just highlighting that one point again, I'll just say, something that I also like to highlight is just how capital light the model is. So we go and we secure the site, so we do some preliminary development work, which there's some overhead costs, there's some expenses involved with that, but it's quite minor compared to the value of a project. In that last example, it's something in the range of like, let's say $80,000 in that range for a project that's worth close to $5 million. So we don't need to make too much investment. And then the actual build out cost of the project and so on is funded through us financing the project and then operating it over time. So a very capital light model that allows us, through owning all the different aspects of the development cycle, for us to go about it that way. I'm rattling off a lot of points, but another one I'll say here is that, we're building a portfolio of renewable infrastructure projects, right? I mean, that's what these projects are. And so something that we start to look at in the sphere of influence in the capital markets is some of the names, whether it be Brookfield Renewable Energy Partners or some of these other names, Borlex, Interjex, et cetera. We start to look at those companies, how they're valued, and what our projects will be valued at as that portfolio grows. And so what I'm trying to say here is that the average lifetime of our projects is 25 years, typically with multiple extensions beyond that. And that compares very favorably to the public renewable infrastructure companies out there, which typically have average asset lives in the range of like 11 to 14 years. So we're excited about that kind of long-term certainty around those cash flows. I touched on the backlog growth. I won't show it here. The last point I'll make is just, we also had a full-time CFO, Marissa, join us in Q4. So before that, we had a part-time public markets CFO. So very happy that Marissa joined us. She was most recently CFO of Street Capital, a public bank. And so she's come over to UGE in Q4. So we're very happy to have her on board as well as we continue to scale the company here.
Perfect. We're done. Awesome. So let me throw some questions, and I also want to remind everyone that's listening, if you've got some questions you want to ask Nick, by all means, use the chat function on your screen, and I'll do my best to ask Nick what you've got. Nick, you just recently announced that you increased the size of a bought deal financing to just over $6 million. Maybe give us a sense of the financing and your use of proceeds. What are you going to spend that money on?
Yeah, for sure. And I think there's an underlying aspect to this as well, just that speaks to, I guess what I'm trying to say is like, especially when we met, both when we presented in, I guess it was late summer, and then Paul and I last met in person for an update on the story about a year ago. And, we were very much in our nascent stages of proving out this model, scaling it up. And it was very much a retail audience, which has really been expanding. And so just over the last month, I guess, throughout January, just continuing to attract greater institutional interest, and through various meetings and so on, attracted a really good group of shareholders that wanted to come in and help fund further growth of the business. So we announced that last Monday, a week ago today. I think from, I guess all of us probably on this call, we know how these things go in a nutshell, and just very, very happy to have good long-term investors take part, and there to be a lot of demand, and only to take a slice of that off the table in terms of funding additional growth here. So in terms of the use of proceeds and what have you, first I'll say that the sector just has so much opportunity for growth right now. One of the examples I give, which I think has a bullet point in this presentation, is that the New York City market, which is sort of our home market for community solar projects, so far in terms of projects actually built out, we estimate it's probably in the 30 to 40 million worth of project value that's been built out so far, and that's all in the last few years. But this decade, our company estimated somewhere in the range of $1 billion worth of these projects to be built this decade, and that's just New York City. And so there's so much opportunity for us to expand. So we already have job postings on our website, for example, and looking to grow out the origination and development team that much further to accelerate the growth of the development cycle, and then by way of that to the balance sheet growth, in the balance sheet and recurring revenues over time as well. So that's the main thing. I'll say that, like, within our space, when we're out there meeting with prospective clients on the real estate side, we like the strength of our balance sheet and so on can help us win deals as well. And it's in a market that we're primarily up against smaller regional developers. And actually, like, one of our main clients, they have one of the big insurance companies as a co-equity partner in their real estate portfolio, and balance sheet had been a concern. Those conversations are starting back up, and we have our fingers crossed that we can win that many more clients by having a stronger balance sheet and being in a better position that way as well.
Awesome. So you mentioned a couple numbers here. I think you said that your backlog's gone from about 30 million up to 120 million. What's your capacity? Like, what can you guys, comfortably handle in terms of backlog?
Yeah, so let's see. I think that in terms of adding backlog, if I start there, with projects that came off the backlog in 2020, that means we added about 100 million worth of backlog last year, and we think that's a good baseline for us to be thinking about for this year and next. In terms of turning that backlog into revenue and assets on our balance sheet, right now, so I will say the backlog, we typically see it as about a 2-year build out. Right now, I know we have 2 positions on our website to grow just slightly our deployment team. That's all we feel we need for this year, 2021, as we build out the first chunk of those projects. Probably grow a little bit next year too. It's a long-winded way of saying that I think our team right now can probably be deploying somewhere in the range of 35 to 40 million worth of backlog per year. And it might need to, this is just a deployment engine, of course, but might need to be 1.5 to 2 times that to deploy, say, 100 million per year, as we'd like to get to in the next 24 months.
Mm-hmm. Mm-hmm. Awesome. Okay, cool. You mentioned New York, Maine. What I found interesting, you actually started talking about statewide sort of regulation. I didn't realize that each individual state has sort of its own unique aspects. So I think you said Maine and New York are your key markets. Can you give us a sense of other markets that you want to get into, or maybe are starting to get into?
Yeah. So New York and Maine have been the biggest ones for us, and New Jersey would be third. If you just think about your geography from Maine in the top northeast down to kind of the DC area, Virginia, DC, etc. We would like to be filling in all of that territory over the next 12 to 24 months. And in our industry, like, one person can cover a couple states, a few states type of thing. But there's opportunity that we see throughout that entire area. Now, of course, some areas better than others, and it is a state-by-state activity to understand, like, how that's going to work, just based on the regulations of how utilities operate and so on. you know, we, New York, New Jersey, Maine will continue to be active for us. Other ones that have either an active community solar market or an emerging one, just kind of to rattle them off my brain: Maryland, Connecticut, Rhode Island, Massachusetts, and then Pennsylvania and Virginia, they're coming.
Okay, cool. We've seen a new administration come into the U.S. Very recently. Any effect on your business? Obviously, a lot more green friendly, but are you seeing anything that's changing for you guys?
Yeah, no, that's an obvious point that I missed when I was going through the update over the last 6 months. So yeah, so the first one, and actually like leading up to the inauguration, there was a wish list of things that we had. The first one, in the US, there's a tax credit, and called the ITC, or the investment tax credit. And to make a long story short, it had been originally put in place under Bush, so it originally came in with Republicans. Had been at 30% for about 15 years, like quite a long time. But then when it was most recently extended, which was at the end of Obama's presidency, it was 30% for, I think it was 3 years, and then 26, 22, and then 10 in perpetuity. So 2020 was a 26% year, 2021 was a 22, and then it would have gone down to 10% thereafter. So it was actually, while Trump was still president, so you can't really give Biden credit for this one, the ITC was actually extended, which was a nice positive surprise. So it was 26% for this year and next year, as opposed to 22 and 10, and then it starts its step down. So we had that on our wish list before that happened, and so that was number one that we wanted. And I think under a Biden presidency, you also have to think that there's a good chance that there'll be a further extension down the road as well. But to start with, we're happy with that, and of course, if there's credits or incentives, we're happy to take them. The sort of the sidecar that we also had on our wish list was, so it's a tax credit, and if just based on the volume, like if you think about UGE now, you know, we have $120 million backlog, and our revenue is a small fraction of that, right? So the amount to use that tax credit yourself, you need to have a lot of profits, and no developers, not UGE or anybody, no developers have appetite to actually use those tax credits themselves. So it creates this secondary market of monetizing tax credits, which is not it's not optimal. And if you're building much larger projects than the commercial community solar scale that we build, that's a little bit more efficient. But in the commercial space, it would be a huge benefit to this industry to change it from a tax credit into a cash grant. And so that's still on our wish list and still being talked about. We think that there's a good chance of that happening. And so, you know, fingers crossed. And that would just give us the opportunity to close deals more quickly, and then also to capture more of the incentive, as opposed to a lot of it going to lawyers and so on that set up these transactions. Number one. The other ones are quicker. Number two is that in the US, we pay, you know, we have less than 10% of our business is overseas. We pay almost twice as much for solar panels in the US than we do in the Philippines, our other market. And the reason for that is the tariff structure on solar equipment in the US. So we're looking for some level of tariff reform. The tariffs as they exist just don't make sense. It hasn't boosted manufacturing. And in essence, these tariffs that were kind of nicknamed the Trump tariffs when they came in early 2018 were probably more about hurting the industry than really helping anybody. So we're still hoping for that as well. And so those are our biggest wish list items. There's this, broadly speaking, this like infrastructure and government procurement bucket. You know, even some of the more centrist Democrats like Joe Manchin came out recently talking about a $5 trillion infrastructure bill. Under Biden, I'm sure that would be tied to environmental measures and so on as well. So that has the opportunity to be a boon for our industry as well, although it's quite nebulous now. Sorry, one other one, and that is that storage. You know, as much as solar costs are coming down, battery storage is doing the same thing, just a few years behind. And right now, to capture that investment tax credit for battery storage, the two need to be tied together, and the battery storage needs to be powered by the solar. So it's quite niche. What I expect will happen, probably the same time as the refundability or cash grant option would come into play, would be that battery storage on a standalone basis would also get the investment tax credit, and that would expand what we could do and the market could do on battery storage as well.
Mm-hmm. That's awesome. So obviously New York, Maine, New Jersey, big sort of defined market areas. What sort of competition are you guys seeing? And are you seeing more because of, I imagine there's, you know, like you talked about some incentives, probably some relatively cheap money. Give me a sense of what the competitive landscape looks like.
Yeah, you know, I get asked this question a lot, and like there's a very clear demand for like money, or like maybe supply is a better word, of money for this space. And a lot of it is, you know, it comes in all shapes and sizes. Of course, the way the market's been performing, and you know, our recent deals a testament to this. There is a lot of money looking for equity plays in this space. But I think the biggest amount of money in this space is looking for the financing of these projects. And on that basis, you know, there's an example in here, and we talk about our hurdle rates of what we earn on our projects and so on. And it's significantly higher than you do in a lot of other spaces. I guess what I'm trying to say is, like, you know, that supply of money more on like the asset ownership side of things and everything else, we really see that as a benefit to us, because it helps us fund our portfolio in terms of lower cost of leverage and so on, right? And whether it be from pension funds or infrastructure funds and so on and so forth. In terms of like actually developing projects, when we're out there meeting with real estate owners and what have you. Now, of course, I'm paid to say this, but the reality of the situation is that there's so many pieces that go through in terms of understanding the local market, understanding how you put all these pieces together and developing these good projects. I can't say that we've seen an increase in competition of late in terms of actually development of the projects. And I think that it speaks to, like, it's not that easy to create a company in this space. I think recently I got connected with a developer that was a couple of people that left one developer to move over and start up their own shop. And that's like the only example I can think of in the last maybe year of a developer in our market. So it's still fairly nascent in terms of us out there prospecting for clients and developing these projects.
Mm-hmm. Cool. Okay, we'll take some questions from some of the listeners here. One that's popped up here is, I guess, reflects back to the financing, some of the institutional demand. What's the percentage of insider ownership, and any sense of what the percentage of institutional ownership currently is?
So I'll answer that question as though the deal we announced last Monday is closed. It's scheduled to close February 11th. So updated insider ownership, if I'm doing my mental math right, would be around 44%. It had been about 48% before that deal. And then in terms of institutional ownership, you know, we're starting from a point of almost zero. I mean, we didn't have institutional ownership 12 months ago, but it's been growing quite quickly. So if I just think about the deal we did, other meetings that we've had, et cetera, institutional ownership might be in the range of, I don't know, probably 20 to 25% now.
Perfect. So obviously the cost of solar has been coming down pretty rapidly. We've seen some legislative changes in the U.S., but are there any other industry trends that you're seeing that could positively or negatively affect your business?
It's a good question. I mean, I think that there's a lot of, I think for a long time, this industry has been about sort of incremental year after year improvements that sum up to something pretty big over time, right? So, you know, solar panels continue to get more efficient and more cost effective. Same with the power electronics, same with battery storage, as we talked about. So there's that aspect. Now, a very important input for us is on the cost of capital. And like I was describing there, increased supply of capital into our space is is continuing to drive cost of capital down as well. So there's that. And then I think on the regulatory front, the biggest thing that we're watching and pushing really relates to the opening up of community solar, and just that being a real exponential increase in the addressable market for us.
Mm-hmm, mm-hmm. Cool. And you guys obviously have grown your market cap. You're a bit bigger company now than you were before. The demand for green investments in the U.S. is pretty large. Are you guys looking at potentially uplisting at some point to the U.S. markets?
It probably depends on the definition of looking, I guess, is what I would say. You know, we've certainly been pitched on the idea. We've certainly looked at it. Maybe I'll leave it at that. I'll say outright, there's nothing imminent on that, but it's certainly something that's crossed our radar, and we've seen some nice success stories out there as well.
Okay, cool. And then where did I go here with my question? I think we've covered all the questions here. Wait a minute. Yeah, Nick, you've done a good job here. It's rare that we run out of questions here so quickly. Okay, so I'll take another one from the crowd here. Maybe you know, or it's probably a job for me to figure this out as well, but how are companies in your space typically valued? What kind of metric should investors use to value a company like UGE?
Yeah, no, I'm glad that question was asked, because I was actually just feeling a bit remiss that I hadn't touched on that earlier. And I'm just going to flip to a slide here, because I think there's one other item that I forgot to mention here. So now, in terms of where we sit within this overall sphere, you know, we're the only commercial mid-scale developer in the public markets, at least in North America. So the best comparables out there, you can look down market to the residential players. Sunrun is probably the best known example of that. SunPower is another example. Or you can look up market to what I typically think about in Canada as like renewable infrastructure names, or they're often referred to as yieldcos in the US market. And so they're primarily owners of assets and being valued on those assets and their ability to grow that. So I flipped to this slide because we talk about our backlog a lot, and this is as of September 30th. And as mentioned, there was about 107 plus 5, so 112 million at September 30th. And then with additional wins in Q4, I just rounded to 120. So a few points on this number. We started talking about backlog in this way just as we had pivoted to say, hey, we're going to own these assets. If we were selling these as an early stage developer, which we were at that time, this is approximately what we could sell those projects for at the point just prior to construction. And so, this is our rationale. We're going to use a 10% unlevered discount rate methodology on these projects. And so that's where that comes from. Now, the company, UGE, we've grown a lot over that time frame. And so one of the things that we've been noticing is that 10% discount rate is way outdated for this space. And so if you actually look at the sphere of influence there that I talked about, if you look up to the renewable infrastructure names, in Canada, they have implied discount rates of like 4 to 4.5%. And in the US, the yield codes are like 3.5%. And then if you go down to the resi space, Sunrun uses a calculation of 6% in their financials. So number one is you're looking at a pretty big difference there. And for every 100 basis points decrease in discount rate, it's a lift in net present value of about 7.5%. So every one of those 1% changes in discount rate is a big increase in terms of like, hey, what are those projects valued at? So that's number one. Number two is those various entities are not being valued at 1 times those numbers. They're being valued at something above that because of the expectation that they're going to be continuing to add to their business over time as well. So I think last I checked, Sunrun was trading at about 3 times their net present value calculation, as an example. So, UGE right now, this is all US dollars, so we're still trading at less than 1/2 of our net present value calculation, and that's only on and that's using this quite conservative discount rate. So anyway, that's what we kind of think about is the sphere of influence there.
And how should an investor look at or try to think of your potential pipeline of new business? How much do you guys, do you get a sense, or do you talk about numbers in terms of how much you're bidding on or how much potentially you're going after in a year?
Yeah, so the 250 mark here, that was our, it was actually above 250, but that was our number from September 30th. So this is our overall pipeline. And our estimate is that about 1/3 of that converts into backlog. So it gives you a sense. And then also based on the success of our backlog growth last year, we're also saying to the market that it's reasonable to think about us adding a similar amount of backlog per year for 2021, 2022. So if you kind of sum up those moving parts, you could say, okay, well, if the backlog takes 2 years to build out, 2 years from now, we will look to have built out this backlog. And then on top of that, have about 2 times it in backlog at that point in time, waiting to be built out.
Mm-hmm. So clearly there's enough sort of opportunity and demand to meet that kind of backlog. You have to sort of execute on the sales channel to get up there, correct?
Yeah, exactly. I mean, I think internally we have a lot of confidence in the movement of these projects through the stages to becoming operating assets. And I mean, I think the 2020 experience itself speaks for the growth there. But I think the biggest thing is, something is happening right now. Like, it's obvious that within this sector, there's a lot of growth happening right now. And yeah, we want to make sure we're capturing our fair share of that.
Yeah, no, clearly it's one of the most amazingly fast and consistent growing industries that we've seen in a long time. And there absolutely is nothing that I can see that might slow it down right now. So I think you guys are well positioned there. Have we missed anything else that you can think of, Nick? I mean, I know the business relatively well, but maybe a little too well in that I forget what to ask right now. But anything you think that their listeners should know at this point?
Yeah, no, I mean, I think we covered the basis. I kind of feel the same as you, that I'm worried that we maybe missed something that was pretty important. But, maybe I'll say that, never hesitate. I'll just flip to the context slide. Never hesitate to reach out. Any questions that come on offline or what have you as well.
Perfect. No, that was going to be my next question, exactly what the contact information is. So perfect. Well, this is awesome. Listen, I mean, let's summarize a little bit. You guys are operating in the solar space, which is one of the fastest growing industries out there. The sort of the input prices have been coming down, so you guys are able to capture that opportunity. There's very few solar investment opportunities, certainly in Canada, and you guys are one of the sort of clear favorites in that space. And it looks like the institutional guys are just now finally starting to get on board. So there's quite likely a lot of discovery still left to go here. So Nick, I've followed you now for a number of years. I think you've done a great job in certainly sort of settling the business down, turning it around, and congratulations with this latest round of financing to help you guys grow even faster. So, I mean, I personally want to thank you for always being available when we reach out to you, and certainly want to congratulate you on behalf of everybody at SED. So hopefully, in 6 months we can bring you back and we can see similar success at that time as well.
Yeah, thanks so much, Paul. Always enjoy it.
Okay, perfect. Okay, everybody, we've had Nick Blitterswyk with UGE International. Great little story. Happy to have him on board, and looking forward to catching up with him the next time we can.